Good morning. Today is June the 24th. I had to look because the whole week has gone by in a flash. How are you, Andy?
It sure has. I'm disappointed in the June month so far as it relates to the weather. It's been rainy and cold here the whole time.
Oh, it's been very hot and humid here in Miami, but that's, you know, par for the course. So, what do you think are the most salient points of last week's trading and investing?
Yeah, so obviously the news the after the close on Friday of a potential coup in Russia is going to be the big event next week, but from last week, for me it was about goings on outside of the United States by and large, with the inflationary print in England and then the BOE, Bank of England, hiking by 50 basis points. And then just continued weakness in the major Asian economies and their currencies, with the yen being very weak and the yuan being very weak. And, that's going to have to be addressed at some point probably over the summer in terms of responses by the PBOC and the BOJ, but it's a trend I'm starting to pay a lot of attention to.
Yeah, as far as the US is concerned, what did we have? We had Powell, who was hawkish, just like he was in his presser. So no surprises there, and the market was not surprised by it. But we had several Fed speakers, after the blackout was lifted, they all come out and they give us their thoughts on what's going on. The impression I'm getting is that the Fed would like to be done, or several Fed governors would like to be done in terms of rate hikes, but they need the cover from data, and which is just not forthcoming at the moment. We are still getting strong core numbers. We do have core PC this week, and they just can't back off. And the Bank of England doing 50 basis points just adds fuel to the fire, as you rightly said. And on the other hand, we are getting some very weak ISM numbers from Europe at the moment. So you're getting this dichotomy, and the US definitely seems to be the cleanest shirt in a very dirty laundry basket.
Yeah.
So that is what the macro is telling us at the moment. But as you rightly said, next week is going to be dominated by geopolitics. I think we can forget about all this macro stuff that we are talking about and just concentrate on the geopolitics for next week, because the first reaction to any geopolitical event is always one of higher volatility. And as volatility goes up, people need to deleverage, and that is a risk off phase. So, regardless of what Powell might say, or some other speakers might say, I think next week is probably going to be one of an initial risk off reaction.
Yeah, that makes sense to me. We never know what could happen between now and the open on Monday, but without any sort of, what we have right now is a whole bunch of misinformation and uncertainty. And, part of the reason why we exited all equities and bought equity calls and spent, what, $2,000 to have the same upside as we had with $50,000, $56,000 of equities is because we thought volatility was very, very low. And these types of events are why it makes sense to do the trade we did and discussed and sent out a video about last week. Not because we're changing our view on equities, but because it's a good risk decision. And we'll see if that pays off. If in I would expect we don't have any resolution by the market open, and it may take weeks or days, hours, days, or weeks for this thing to get more back in hand. And that's bullish for volatility. I think that's
Yeah.
about all we do know. I don't know anything about what's going to happen in the outcome of
Yeah. The range of possibilities of outcomes is so wide that we can't say anything intelligent at the moment. I mean, from one hand, you have the best possibility, which is something like a Berlin Wall moment, whereby Russia who knows, comes back into the fold of Western nations for the first time in 100 years, or all the way out to, dare I say it, some horrible nuclear accident. So the range of outcomes is so wide that trying to predict them at the moment is impossible.
Right.
All I know is that I've seen just now a video of Russian helicopter Prigozhin's column, so it doesn't look like it's going in a right direction. And at the moment, the market, the unofficial market for the week, there's IG Index does a market for the weekend. It's showing the Dow down about 200 points. We have no idea whether that will last or will reverse completely. All we know is that we are positioned well for it. And next week, we should take advantage of that positioning and look to potentially buy some equities.
Yeah,
Let's
certainly in a
discuss.
risk off, you're replacing those calls, which are going to hold a lot of their premium that we paid because of the increase in volatility, with, reverse out, sell those calls with limited loss because of this increase in volatility and replace with stocks. Sounds like a real opportunity if we get such a thing.
We might just discuss broadly how wars affect markets. You will remember that when this Ukraine thing started, you had a very, very brutal risk off situation in which German bonds actually soared in value. That was all reversed and more, but the risk off wave basically overpowers the bond market and it does things that it shouldn't do. Wars are inflationary by definition. Reconstruction is inflationary by definition. And really, the first move is always, nearly always, the wrong move. Bonds will, if this goes into the direction of war and eventually reconstruction, etc., that is higher for longer by definition. And therefore, any kind of risk off move in the bond market is something that you want to fade. Certainly not in the first day, two, or maybe week or month, who knows. But that is all we can say at the moment, is that the first move tends to be the wrong move, and eventually equities perform much better than bond markets do, even though in the short term that is exactly the opposite.
Yeah. Yeah. I mean, again, I think what we'll have to do, what we're really saying is we don't know. And geopolitics can go lots of different ways and are unpredictable. And markets tend to do a pretty bad job in predicting the outcomes of geopolitical events. And so trading them ahead of the event doesn't, to me, show a lot of opportunity except fades like you describe. So, we'll be looking at that and email you throughout the week, if necessary, about the outcomes that actually occur and what that means for markets.
Yeah, and we are wonderfully positioned. We have over 50% in cash, very small bond position, zero equities apart from calls. And as you said, the calls will return their value if volatility rises, as it should. So we will email you with updates, and this is what this service should be about: holding your hand through these geopolitical events and telling you how we're thinking about the markets as they change day to day with these events.
I think it's, yes, absolutely. And I think it is worth mentioning that absent that, there are other things happening next week. Nick mentioned the thing that the Fed cares most about, which is core PCE. That's released on Friday. We'll get a GDP update on Thursday, as well as the normal and now very carefully looked at jobless claims numbers. And I need to mention that $120 billion of 2-year, 5-year, and 7-year notes will be issued during Monday, Tuesday, Wednesday, along with $300 billion of bills. That's a very, very heavy issuance calendar, and it doesn't even count the likely 100 to 200 billion of bills that have yet to be announced, but are scheduled to be, in
Mhm.
terms of quantity, but are scheduled to be issued on at the later part of the week. And then I guess the last thing is that, absent anything that's going on in Russia and the Ukraine, the quarter end is a opportunity is often the time when funds do their asset allocation rebalancings. And in periods of time in which there is very strong outperformance of one asset over the other, in this case, stocks over bonds, portfolios get out of balance. The 60/40 portfolio may be 65/35. And so, in order to get back into their mandated balance, funds sell what has outperformed and buy what has underperformed. And the quarter end rebalance flows this coming week, which ends on June 30th, are quite large, because of the strong outperformance of equities. So, absent that, there was this same risk off like flow that we expect for next week. And, so that's going to be playing out through the week as well.
And it's going to be exacerbated by the geopolitical situation.
Right.
Because if the market wants to go into risk off in any case, plus you have the rebalancing, that's going to exacerbate those flows. And that should be an opportunity for us to rebalance our own portfolio, hopefully at much better levels.
Yep. So, as it relates to the portfolio, I think the answer to that is uh, we'll tell you when we know. But right now, we're well positioned and have no new trades to do. But there may be an opportunity, and we will email you with that information.
Absolutely. Have a wonderful week, and we will email you with any thoughts throughout the week. Let me very quickly run through the portfolio. We sold all our equity ETFs, and therefore our balances are zero. We do have a upside call, and that will be reflected in the broker statement. The chart pack is also updated, and we have no orders entered into for this week. But as we said, we will email you throughout the week as the geopolitics evolves. But in principle, we're looking to pick up cheap equities on a risk-off move. The broker statement, of course, is here, and you can download it and see the positions and the upside calls that we have in equities. Thank you very much indeed. Have a wonderful weekend, and we will email you, as I said, throughout the week.